Hey everyone, it's Mike Wise with CMG Home Loans and welcome to your weekly mortgage update. This week we've seen a mix of global headlines, shifting bond yields, and some big economic numbers that are starting to point towards lower interest rates. From the airstrike in Iran to new home sales slumping, rising jobless claims, and a softening GDP report. So there's a lot to unpack and understand if you're watching the mortgage rates or the real estate market. Plus, there's a lot of talk that's a possible rate cut in July and even some early noise about who might be the next Fed chairman. So all of this impacts where rates are actually headed. And if you're a buyer, seller, or just watching the market, now is the time to pay attention. In this update, we'll break down why the bond market has improved slightly and what that means for mortgage rates and the latest housing and job data, what that is signaling, and then how oil prices and the kind of geopolitical politics didn't do what most people had expected. So the next big driver that is going to impact the mortgage rates after all of this is said and done is that big, beautiful bill in DC that they're working on. So let's dive in and look what's moving the markets and what it means for you. So let's take a look here. And what we're going to understand here is, let's just talk real quickly about the mortgage rate. So this is the bond yield. This is Thursday morning here because I'm going to be leaving on Friday, or actually I'm leaving today, but the bond yield here, we're showing it's up 10 basis points. That's good news. It's not a huge move, but that's positive. But the big news here is the yield on the 10-year Treasury. So let's take a look at what is happening to that yield. And as you can see, over the past week here, the rates have trended down. They've moved past the 25-day moving average, the 50-day moving average, the 100-day moving average, and the 200-day moving average. So interest rates, this is the 200-day moving average. The last couple of days, we've moved past that moving average. That gives us room to go down to what we call this support level. It's a Fibonacci level. It's support level here of 412. So if that goes down here, we will start to see some lower interest rates. So this is really good news for what's ahead for the interest rates. Now, as we unpack all of that, let's go to the actual interest rates here. So as of this morning, we're looking at right around 6.79. Not a huge move, but we're going in the right direction. You can see that it's moving towards the positive side of the rate trend, and we're starting to see those lower rates. So keep your eye out for these rates to go down, because at the end of the day, what we're seeing here, in fact, let's go to the Fed watch, what we're seeing here. And so in 34 days, 34 days, we are going to see, we're going to have another Fed meeting. And there's a lot of talk this week with a lot of the Fed governors. 3 of them have basically spoke about lowering in July by 1/4%. So you can see that this number here last week was way up, almost 90% of not moving rates in July. And now it's more towards the 73%, and 25% are leaning towards lowering the Fed funds rate. So this is kind of big news. Now, what's happening here is President Trump is basically floating the idea. You've seen in the news his disappointment with Chairman Powell at the Fed, and this is he's not going to be re-elected as the Fed chairman. So because Trump wants him to lower the interest rates. So what you're starting to see is all these Fed governors, Fed presidents, they're starting to voice their opinion as to why they think that we should be lowering the Fed funds rate. What are they doing? Well, they're putting their name in the hat for becoming the next Fed chairman. So they want to basically be in good graces with President Trump to be able to have this job as the Fed chairman. I don't quite think that they are in the lead there. Scott Bessent, Kevin Hassett are a couple of the names that are out there. that have been floated for the new Fed chairman. And Trump is basically thinking about appointing someone as the next chairman so that they can have an impact on interest rates. And so those are the people that he wants to actually lower the Fed funds rate. So at the end of the day, you will start to see more of that come out in the coming months as we move forward. So, and more pressure on Chairman Powell to lower the Fed funds rate. So now I'm just going to go to some of the updates here. This is the Wall Street Journal. This is Powell actually did have a testimony back in DC this week, and he's holding firm. So he is holding firm, waiting on data to make sure that that there are signs of the inflation coming down, the tariffs aren't having any impact, etc. So a couple of things I want to go over. U.S. Home price growth, it cools to two-year lows. So that's basically, it's come down a little bit. It's a little down, right, as of right now. So we're waiting on those interest rates. Even though the home sales rose in May, it's very, very sluggish. And in my market where I'm at, you can see that there's more inventory coming up. There's more inventory now than in 2007. So a lot of houses, they're sitting right now. I think that was an impact of the tariffs and that initial kind of impact of the stock market with the tariffs and what that was going to have. The stock market not only is back, but it is going above and beyond where it was. So I think more people will start to see as it gets through the summer here, after vacations, after graduations. I think you'll probably start to see the market move. And if we start to see the trend of the interest rates come down, that will be a huge benefit. So the mortgage market has been slow as of late here. But now let me go to, that was the economy. Let's go to the markets and finance here on this. And let's see here. I wanted to go down here. Oh, regulators. This is one thing that I wanted to talk about this week. This is a big deal. So the regulators moved to ease the financial crisis era bank capital rules. This is going to allow for more banks to lend more money, which will have more flow in the economy, and that will generate more jobs, more activity in the financial market. So that is a good thing for that. Oil prices. Oil prices are down from they're actually up just slightly from their lows, but they're right around $65 a barrel, and that is that's a good thing at this point in time. I don't see those moving too much more until the interest rates fall and the U.S. can produce those things. But that is one of the things that we were worried about, oil prices with the war in Israel and Iran, and what impact that was going to have if we got into a bigger scuffle. And so because Iran produces a lot of oil, obviously, but we thought maybe we're going to see a spike in oil prices. That would have had a huge impact on inflation. Interest rates would have gone up and so forth. So there's a lot of negative factors that could have happened, but we are now more dependent on oil being produced in the United States and not as dependent on foreign oil at this point in time. So the oil prices stayed pretty firm during this whole airstrike that we had with Israel and Iran, and then the U.S. getting involved. So we thought that was going to have an impact, but it actually, it stayed pretty calm. The markets were pretty happy about it. I think the whole nuclear, missiles that Iran was, talking about developing and having, that put a kibosh to that. And I think the market did actually like that for the market. And so it did not move very much. So at the end of the day, there's a lot going on, but what we do know is that mortgage rates, they are on the downturn, and this is good news for what's going forward. I am Mike Wise with CMG Home Loans, and I will be traveling this weekend, so I will be in the mountains, not being able to respond right away. So if you want to text me, I can probably text, but it might take a little bit to get back to you. So I hope you have a great weekend, and if you have any questions, let me know, and look forward to hearing from you soon. Thanks a lot. Have a great weekend.